Joining tonight. My name is Sabrina, and I host these short homeowner workshops each week to help break down some of the topics that can feel really confusing when it comes to mortgages, home equity, and home value as well. Tonight, we're breaking down and talking about what it actually means and when it makes sense to borrow from your home's equity. A lot of homeowners, they know they have equity in their property, and they're not always sure when it's helpful, when it might make sense financially, or when it's better to just leave it alone. So, tonight we're going to walk through what equity actually is, the different ways homeowners can access equity, situations where it can be helpful, and situations where it may not be the best move. My goal with these sessions is simply to help homeowners understand their options in a clear, calm way so they can make informed decisions about their homes. All right, so let's go ahead and recap here. What is home equity? Home equity is simply your home's value, and then you have your loan balance, and it's your value minus your loan balance, and that's going to give you your equity. Okay, this is your raw equity, your total equity that you actually have on the home. All right, some ways homeowners use equity. So in these situations, is where my expertise is, and ultimately the ways that I interpret them over the years. I have worked at banks, two major banks, and I also worked at the number one mortgage lender as well. So I have a ton of experience and I want to make sure that I am informing homeowners on these opportunities, what they look like, what may be good, what may not be good. And I've worked with clients in over 20 states as well. So I've seen a lot of things here in my lending days or my financial experiences. So I want to make sure that I'm helping, and this is where my passion lies. So ways that homeowners use equity, common ways. The first one being a cash out refinance. Second one, a home equity loan. And the third would be a home equity line of credit. And also reverse mortgage. I am newer with the reverse mortgages, but they are a really great tool and can make sense in certain situations. Okay, so cash out refinance. This is where your mortgage is getting replaced by a new mortgage. So simply put, you're refinancing. So you're taking this mortgage, you're getting a new mortgage, and you're taking out equity along with that. So you're forming a new loan here. So with this, it's basically, looking at it, you're just refinancing. You're not going to keep your existing rate. You're going to get a new interest rate. You're going to get a new payment. You may have a new tax and insurance account as well. So yeah, pretty simple there. All right. So yeah, this can be useful based on your financial goals at the end of the day. So we can go more in depth here. Excuse me. Okay, home equity line of credit. So what is a home equity line of credit? This is, think of a credit card. So it's very, very similar to a credit card. However, you are using the equity that is in your home. So when you have this line of credit, you don't always have to take money from it. So think of it like a credit card. It's utilized sometimes, it's meant to be paid off in a really efficient way. So say efficient. Um, Home equity lines of credits, I've seen these used for so many things. Now, I always say a solid payment plan is always a good thing because these tend to run off of variable rates. There are some opportunities for fixed rates with these I've seen. However, with these, there's draw periods. So you can only draw from them in a set amount of time, 5, 10, 15 years, and whatever the case may be. And after that, you do have to pay it back. So you definitely want to think and know what your terms, your conditions, all that stuff. You want to go through the fine print or ask your lender, your broker, whoever you work through the ins and outs, the pros and the cons, and they should be able to help you with that. So this one allows for flexible borrowing and using the funds as needed, as I had mentioned there. I always educate my clients on this opportunity based on how they are going to pay it back and the comfort level because we all have different things going on within our lives. Um, Payments may be easier for others in a different fashion. Something might make sense for somebody versus something that doesn't make sense for another person. So always going to be, um, it's always going to be different there with everybody because we're all on different timelines. All right. So yeah, as I mentioned, the home equity line of credit, you borrow from it as you need to, rather than receiving one lump sum, which will lead us into our home equity loan opportunity. Our home equity loan is basically, I said opportunity. So a home equity loan is another opportunity where you can use equity. I've done so many of these back when I was in the bank. And yeah, I remember there were little nuances with the deed, with the state, and yeah, sometimes I had clients sign these documents a few different times, but it's okay. So I definitely know how these work. I tend to like these home equity loans a lot. I will tell you, they are very nice because you can pick different terms. You can tend to pick like a 5, a 10, a 15, a 20, or even a 30 year if you want that low payment. So this opportunity is really nice when you might have a renovation, just something that you're wanting to do. And I'll get a little bit more into that here in a second. But these are the second mortgage. So you have one lien with the mortgage, and then you have that second lien, which is your home equity loan. So you have two different things going on here. They're both attached to your home as liens. Okay. Now you'll still keep your mortgage payment. You'll still keep your mortgage rate. I have clients that are still in the 2021 era, 2%. 3%. I even remember locking somebody in at 1.99 at one point in time, which is really great. I miss those days. So obviously rates work off of a market, so there's not really a whole lot we can control there. So anyway, home equity loans, I do like and I do favor. I always love to compare these to a refi and let my client decide what is going to be the best option for you, depending on situations. And sometimes I'm able to give enough info to where we know right away what's going to be the best. So, all right. So yeah, and this one is fixed amount and fixed payment. So these tend to be a fixed, I don't think I've ever seen a variable. But the fixed rate and the fixed payment just means it works off an amortization schedule. I just want to give you that before I move forward. So it works just like a mortgage would, and you just pay it down. The balance goes down over time. All right, so we'll get into the uses. Some smart uses of equity. So when using equity can actually make sense for you. This would be home improvements, debt consolidation, investing in your property, financial restructuring. Okay, so there's so many things that I've seen equity used for. What makes sense to one person might not make sense to somebody else. So in explaining that, home improvements are great. So this can be something significant like a bathroom, something in the kitchen, it could be a new room, add-on, things like that. You can improve your home in so many ways. So with this said is that those home improvements can range. If it's maintenance stuff like a roof or siding or something normal, it's supposed to have, that's not really going to significantly increase the value. So I just want to clear the air there. Whatever the home really needs and has, and if you're just like replacing this or replacing that, that is just part of your home. So that's just maintenance. So mostly maintenance stuff you kind of want to think is that, that stuff's not going to truly add a ton of value, but I mean, it's still good to have all that stuff done because you need to maintain your home. With debt consolidation, this is great when you have credit cards, you have personal loans, even auto loans, and you are in a struggle bus from month to month. And the cost of living is just going up and up and up. And I feel it, so I know you have to feel it too. And it's okay because that happens, life happens, and also things come up. We are all on different timelines. We all have different things that we're dealing with. And yeah, that monthly payment, I've lowered payments for clients as low as 200 and that's helped them, and also as high as 2,200 and that has helped them immensely. All right. Investing in the property. So this is, you know, like I had mentioned before, major investments. Think of, what do appraisers really look for? I do have a video about that too. So investing in the property. Um, you're looking at square footage. I mean, you're looking at like some major things that are going on. So that kind of ties with home improvements, but this would be maybe adding like a garage. I'm not quite sure. I'm not a realtor, so I don't want to say that, but it would be something significant in the home that you're really upgrading to add that value. I always say new room, new bathroom, because that's like another, two beds, two baths. That's always going to be appealing. All right, and financial restructuring. So this falls in line with the debt consolidation piece. You can restructure your debt with using the equity in your home. I've seen that a lot of times, but I've also seen restructuring to use that equity to put it away because you want to have a nest egg and have that availability to have money set aside for things. It can be anything. You can have your daughter's wedding or son's wedding coming up in a year, 2 years, or even if you want to plan sooner, savings always helps because things come up and more than likely when we're least expecting them. So you want to make sure that you have things in place and you might want to do some restructuring of things. I've also seen things like where, okay, maybe you do a debt consolidation, plus you also want to do something fun. You can do that too. Just make sure you're really, really um, knowledgeable, or not knowledgeable, comfortable with this idea or this plan that you have because you don't want it to fall apart. So that is totally up to you. And I know when I talk to clients, sometimes I don't always get the full picture of what's going on. There's a lot of outside noise, forces, and maybe things going on too, to where having this little bit more of information is going to help make a really calm and easier decision when it comes down to it. And, we make our payment to the monthly payment. We don't pay to an interest rate. So if you're stuck on that low 2, 3%, I will tell you, I've had clients that refi out of that rate and go into a much better monthly payment are very happy because that's how they pay their bills at the end of the day. So what makes sense to somebody might not make sense to another person, though. So we're all on different timelines. Okay, some situations to be careful. So when to think carefully. A short-term spending. So say you want to get this money, but you're just wanting it to have for things like the short-term needs. And I get it. Sometimes short-term needs can be important too. So it just depends on what you really and truly have going on. The short-term planning, impulse buying, that goes hand in hand. Lifestyle purchases. So when you're looking at designer things, the flashy things, and this could be expensive cars, can be anything truly. Now, everybody's different, so I will tell you, I have had clients refinance. I had a gentleman that did a refinance and ultimately was able to get his car, say midlife crisis, but I don't know how true that is. Anyways, he was able to get his car and he had a plan because he was actually retiring within the next, it was like 2 to 5 years here. So he did have a plan in place to pay this back. Obviously, when you retire, there's payouts, there's different things. You know what you're going to get, and you know what plan you have in place to ultimately make your payment back and just know where you're going to be at financially in that set date and time. And yeah, if you have a plan in place, that is absolutely okay. So why not enjoy your life right now? I've had an elder client to where they did do a restructure and ultimately took a little bit for a trip because that was a trip they've been wanting to go on their entire lives. And that's super important. Those life goals. And it's not like they were being very irresponsible. They were making a smart decision and just taking that little bit extra for something fun. So I always say that is okay. Whatever works. Everybody's different. Everybody's on a different timeline. We have babies being born, new homes, you need new home. Sometimes your child is moving out of the home and you need to downsize, or they have different situations like divorce or marriage or blending a home. There's a lot of situations. Family members, so this can be anybody really. Um, you can be helping a family member. Maybe their living situation changed. You could be helping an elder, moving them in or possibly moving them out. Even with their home, you might need to help with too. So everybody's on a different timeline and we have different things going on. So that is why it's so important to know and be knowledgeable about what options you really have. Because if you're not, um, and if you make a really rushed decision, that can hurt you in the long run. And that's a situation where I don't like, and I don't like to ever see anybody in that situation. So always urging my clients to thoroughly think through these things and truly understand the nature of what's going on. All right. Uncertain income situations. So this is another really great caution area. So say your company is laying off people. You never know. And you want to have a plan in place to pay this loan back because you don't know what's going to happen. Or maybe you shouldn't take this loan because it's truly not the right time. You don't know. Maybe you have plans going on. I mean, you know your life and you know those situations. Sure you do. And maybe you have a situation where like, oh yeah, if this happened, A to happen, B would happen. Like I would pick up here, I would pick up there. We all have different educations, we all have different qualifications, and we know our plans in and out when you're really comfortable. That can be good, but if you are in an uncertain situation, you might want to rethink about that. Okay, so how lenders calculate usable equity. So with this, how lenders calculate usable equity, they will typically be around that 80% loan to value. And I created a tool which is super easy for using. And honestly, I check my equity um, pretty often to know exactly where I'm at because I don't know what's going to happen. I want to know how much I have access to, or just have that like peace of mind that like, okay, I know if this were to happen, I could do this. Now, I will tell you, loans, especially mortgage loans, they're like a puzzle. So you have your credit score, you have your debt to income ratio, and then you have your loan to value. Okay. So loan to value and equity is what I talk about. It's my passion, and this is a big piece of the puzzle. Credit score is great. Most clients know their credit score, and I'm happy and able to give information when I myself am calling to give that quick estimated interest rate or whatever the case may be, my opinion to a situation. Um, Other than that, veterans, they do have access to a little bit more equity sometimes in some situations. So that's why I have 80% loan to value. From what I've seen in my expertise, 80% is very common. Sometimes different loans, different criterias would allow for less or even for more. So my thing is that these are educational tools. This is helpful information for you. And my guide and my calculators are just educational information for you to know and see and evaluate this piece of the puzzle. Obviously, educational only, built off of years of expertise. You always want to speak with a broker or a lender because they are going to be that person to tell you and explain these concepts, letting you know the pros, the cons of each one, and you can make that decision yourself. I operate in a calm manner because I understand these decisions take time. I, for one, have been through these decisions and I've helped clients with these decisions too. I've had clients at the bank where we've sat and talked for months and weekly appointments, we've connected every week. And you know what? They did end up doing a move, or sometimes they didn't. And sometimes they needed more time. So it just depends on what is going on in that situation. And like I said, we don't always know the full picture either. So, and that's okay. I'm not supposed to know everybody's business either. And, same goes for me. But I'm here to help you and I'm here to guide you through these decisions. And without having to jump on the phone with a broker or a lender, so I have to catch my breath. So without jumping on the phone with a lender or a broker, because more than often they're working the same hours as you or after hours. Um, I know how life is. Happens, and sometimes we put things like these on the back burner. So, this is why I created tools and guides so that way you can look at everything calmly. And I also know and have a lot of friends that are introverts and really are very uncomfortable with getting on the phone. Even me, as a family friend, or when I talk to family or friends, yes, of course, talking about your financials can be very daunting. So I, for one, understand how it works. And everybody's in a different zone, and that's okay. Right. All right. And then in closing, my goal is to help you again understand equity before you use it or think about using it because this is a nice, easy approach. We're not checking credit or going through any funnels here, just operating in a nice, calm, peaceful manner. I do these weekly webinars every Thursday at 7 o'clock. Sometimes I do them a little bit later. Right now it's 10:30 because I had recorded this earlier, but something was wrong with my audio, so I had to re-record it. It's okay. I'm getting to it. And I'm practicing, so everything is always just leveling up. But I do have my Calm Equity guide that's available. I'll post the link. Of course, this is going to help you walk through these decisions to see, like, okay, what's what, help you understand everything. And I post these weekly webinars as well. And I will show you my lovely tool I created. I only put a screenshot here, so can't really play around with it in the screen, but that's okay. You'll get the gist. And it's got a fun little like, oh, doesn't show there, but it's got a fun theme to it to where you can toggle and do nostalgic themes. So you wanna check it out. It's very fun. Um, but this equity calculator, actually, without doing all the math, you can figure this out yourself. Okay. Sorry, this is Zoom just letting me know I have 10 minutes because I'm on the free plan. Anyway, okay, so you can plug in your home's value. So simply just doing some really good research on home value. I have a video on that and figuring that out. Plugging in your mortgage balance. So just simply going to your mortgage portal. I mean, this is simply just going to the app or going to the website. What's my mortgage balance? Pulling up a statement. You're going to plug in your mortgage balance and then any other liens that you have. So if you know you took a home equity out or a home equity line of credit or any other lien against the home, a second lien, it could be solar panels, it could be down payment. Sometimes down payment assistance is on there as a lien. So you can plug that in and see, and then just leave the loan to value at 80% as a benchmark and see how much equity you have. So in this example, you can see there's 10,000 in available equity. In this situation, I would recommend against a refinance because there are closing costs that are involved in a refinance, and honestly, this really wouldn't pull a lot of cash out. So it's good to see where you're at, just to have some peace of mind. I like to know where my equity is at all times, and having this tool is going to help you to determine that on your own. Um, Other than that, yeah, my guide is available now. I've updated my website. Um, Still working up towards things, and I'm a paraprofessional during the day, so I do get busy, but I do make my calls every night. So I have kind of this really odd schedule, but it works for me and my family right now. And I will be on next week with another fun topic. Other than that, I hope you enjoy the rest of your weekend. Um, we'll talk soon. Bye.